Dear shareholders, today we published our first quarter results for the year 2018. From my perspective, overall a very solid set of numbers, getting us another step closer to the delivery of our multi-year guidance, which we communicated as part of our IPO. The macro environment in the preceding quarter was characterized by inflation rates still above 10% and subsequently lira weakness against euro and dollar, as well as increased nominal financing cost. We at Energisa continue to execute our strategy based upon our highly regulated activities. In our distribution business, we seek to provide the much needed power infrastructure. Thereby we generate guaranteed inflation-adjusted investment returns. Furthermore, we provide more and more efficient and higher quality distribution services. In our retail business, we aim to increase profitable volumes and customer numbers, providing both regulated and free market services, depending on the prevailing market circumstances. Our first quarter figures were very solid, coming from both our distribution as well as our retail activities. Our earnings showed very high year-on-year growth rates, driven by both a relatively low prior year comparison base as well as an exceptionally high first quarter 2018. Accordingly, we expect the growth rates to decline in the remaining year. The reverse is actually true for cash flows. In this quarter, we recorded a very low operating cash generation, among others driven by cut-off effects in our working capital. In coming quarters, we expect the cash generation to pick up substantially. Based upon our first quarter performance, we confidently reiterate our midterm outlook. In the years 2016 to 2020, we target to increase operational earnings with a 20% CAGR. Expect underlying net income to grow with a substantially higher CAGR and target to pay out 60 to 70% of our earnings each year to our shareholders. We do all of this in the context of our prudent TL-focused finance strategy and thus will not exceed a net debt to operational earnings ratio of 3.5 times. Furthermore, we now provide an outlook for the specific full year 2018 within the context of this multi-year guidance. So, for the full year 2018, we target to generate operational earnings of 3 to 3.3 billion. This growth is expected to be driven by both our distribution business but also a recovery of our retail activities. When translating this operational earnings growth into underlying net income, investors should be mindful of a higher year-on-year net debt balance for the full year, coming along with higher averaging financing rates, but also a higher tax rate. Finally, to put things into perspective, I can say that the Energisa management has the ambition to grow the underlying earnings not only in the midterm, but also every year, thereby providing a good basis for dividend growth. To summarize, very solid set of first quarter numbers, midterm outlook reiterated, 2018 outlook specified, strategy execution and therefore full leveraging of our highly regulated business model and market position ongoing. Thank you very much. I look very much forward to seeing all of you on the road.